Hi, I'm Don Carriker with IWantAGreatHomeLoan.com, and I'm here for another edition of It's Not Rocket Science, where we try to teach you all the ins and outs of home finance. I'm here with Justin Sturdivant from Greater Springfield Realtors, one of my best realtors, and he said that he had a question from one of his clients that came up and he wanted to ask me. So,
Well, I get
what
it
is
from I get it from a lot of clients, Don. When they call me up, my first step is to send them to a lender to make sure they can get qualified.
Mhm.
Often they kind of skip a step and they want to know what type of loan they need to get.
Okay.
So, one thing we might cover is you just reviewing what type of loans are out there.
Okay. Well, if I was to do it from a best loan possible out there,
Okay.
then I think that'll be the easiest way to describe it to people.
Okay.
First, I would ask my clients, are you a veteran? Because the veteran loans are very, very good.
Okay.
And if I was to ask them, are you a veteran? Then I would ask them, are you a disabled veteran?
Okay.
Because I think it's actually a good thing that the best loan out there that I'm aware of is for a disabled vet.
That's
And why do I say it's the best is that it's going to give you 100% financing,
Okay.
no down payment, great interest rates,
all right.
and to top it off and no mortgage insurance, and it's also going to not charge you any type of extra fees called a funding fee.
Okay.
So you get top amount of loan value, you get no mortgage insurance, you get good qualifications with a good interest rate, and no VA funding fee.
Oh wow.
So that's the best loan that's out there.
So that is the benefit, one of the added benefits, and one of the services we provide to our veterans.
Definitely.
Okay.
And we should.
We should,
And thank you
absolutely.
for your service, any veteran that's watching this.
Absolutely.
I'm a veteran myself, so
Okay.
I really appreciate it. The next one down in our area, in the Springfield area, would be a USDA loan, and that's called a Rural Development Loan.
Okay.
And it doesn't mean a farm loan.
Okay.
It means developing rural areas with residential mortgages.
So can I buy an active working farm with that?
No.
Okay, no.
Absolutely not.
All right.
And you can't buy a property that has too much acreage and that kind of thing. So it's,
Okay.
just think of, if you pictured a house on 5 acres with no barns, it's a normal residence,
Mhm.
that's what they're looking for. And it has to be outside of the metropolitan area of
Okay.
Springfield and Nixa in our area. There's many areas across the entire country that can do USDA loans.
Oh, really?
Yeah.
Okay.
And why those are so good is they are also 100% financing
Okay.
and good interest rates. They have a funding fee right now. They've been changing it. It's hard to keep track of all these changes that have gone on, but they change it frequently. Right now, it's a 2% funding fee.
Okay.
So you have to pay that. It's rolled into your loan. So if you borrowed $100,000 to buy a house, then the funding fee would be $2,000, and that would be rolled into the loan amount when you take the loan out.
Okay.
So it'd be approximately $102,000 when you finish up at closing.
Okay.
Then it has a small amount of mortgage insurance.
Explain mortgage insurance real fast.
Sure. Mortgage insurance is basically, easiest way to describe it is when your grandfather went to get a loan from a bank
Yeah.
50 years ago, he would have to have, well, the banker would say, do you have 20% down to buy this house?
Mhm.
And if your grandpa said, no, I don't, I've got 10% down, he'd say, see ya, come back later when you got 20% down and we might give you a loan.
Yeah.
Insurance companies got involved in it, and so did the government, of
Okay.
insuring the amounts above 80%,
All right.
which allowed people to not have such a large down payment. And that's when more and more people were able to get into houses.
Okay. Good.
So what the USDA does is they have their funding fee that I talked about,
Mhm.
and then they also have a monthly mortgage insurance premium that the person has to pay.
Okay.
It's very small. Right now, it used to be 0. The government's changed. And right now, it's 30.35% of the loan amount. So,
Okay.
and that's per year. So let's say you're buying a $100,000 house, 0.35% would be $350 a year. So that's going to average out to be somewhere less than $60 a month.
Okay.
Is
So
your mortgage
very
insurance.
small amount.
Very small amount, a lot cheaper than FHA
Yes.
or any other mortgage insurance that's out there.
Okay.
So we've got VA, if you were a VA uh, uh, disabled vet.
Okay.
Then the next level down is not another VA loan, but a USDA loan if you're buying outside of metropolitan areas. Then you have the VA standard loan.
Okay.
And why I went to that, why I'm showing that, is that their funding fee is higher than the USDA,
Okay.
but they have no monthly or yearly mortgage insurance. So it's kind of, they're very close.
Yeah.
The VA, the regular VA and the USDA are really close right now to each other. It depends on the person's situation, whether they should go, if they can go VA, or whether they choose to go USDA.
Okay. So sometimes loans are situational.
Very much so.
Okay.
Very
Almost
much so.
every time.
Yeah, really almost every time, because you have to be able to meet the qualifications to get that loan.
Okay.
So going back, we'd say VA if you're a disabled vet, USDA and regular VA together are very close together, and then below that would be FHA. FHA's fallen far down the list right now, and it's almost like a conventional loan because they're charging so darn much on the mortgage insurance nowadays.
Okay.
It just changed in April of this year, 2012, to where they're now charging 1.75% upfront mortgage insurance premium. That's $1,750 for a funding or upfront fee.
Oh, wow.
That's added to your loan. And then on top of it, if you only have the minimum down payment, they're charging 1.25% per year. So the VA or the FHA used to have a 0.55% charge per year
Okay.
on mortgage insurance.
Which is still higher than USDA.
It's still higher than USDA,
Okay.
but now they've more than doubled it, up to
Oh, wow.
1.25%.
So on a $100,000 house, what are we looking on a monthly basis?
I would have to do a
Okay.
calculation. I don't keep all that. I'm not smart enough to keep that in my head.
He's
But-
not Rain Man.
Yeah, no, I'm not. 24. But no, what I would have to do and what I do with my clients over the phone, I can let them know in as little as a minute
Okay.
what a good type of payment would be for the house or price range they're looking for.
Okay.
And then after you go to the FHA, I said it's really close to conventional lending.
Yeah.
The benefit for a conventional loan versus versus the other loans is that it doesn't have any upfront mortgage insurance premium
Okay.
and no extra fee.
Okay.
And it meets conventional guidelines, but you've gotta have 5% minimum of your own down payment,
Okay.
your own money. And it
So-
can't be mattress money, that money you keep in the jar, it can't be that. It
You
has to
said
be
mattress
provable.
money, so it's something that needs to be seasoned
Yep.
in an account.
Provable.
Provable.
Gotta be sitting in an account that we can show that it did not come from some other weird source,
Okay.
like the seller, as you
Alright.
know, is illegal.
It
So
is, yes.
that's what they're looking for. They wanna make sure that the money is seasoned and came from a proper source, like your
Okay.
paychecks.
Absolutely. So you just need that paper trail
Exactly.
all the way through,
Mhm.
just like you're doing with the IRS.
So going from best loan to worst loan,
Okay.
we've got VA, disabled vet, USDA, if you're buying outside of the metropolitan area,
Okay.
really close to that is a standard VA loan.
All right.
And then you've got an FHA and then a conventional, which are very close together right now too. And the rates are all very competitive right now.
Okay.
We're right now, rates have kind of gone squished way
Absolutely, yeah.
down. There used to be, a big percentage difference in rates when the rates were at 6 and 7%.
Yeah.
You might have a 1% spread between different loans. Well, you can't get that when the rates are down here. There's not a 1% spread to have. So they've gotten very squished and very close together,
Okay.
and we are at almost all-time lows. So it's a great time to buy a house or refinance a house.
Okay. You said conventional to wrap up. Just,
Mm-hmm.
so we're doing a conventional loan. We do have to bring 20% down.
Not at all.
Not at all.
No,
Okay.
not at all. You only need 5%
5% of your
minimum
money.
down on a conventional loan.
Okay.
You will have to pay mortgage insurance, and there are ways that I can show my clients where they can eliminate monthly mortgage insurance, and I know how to do that.
All right. Well, that answers most of my questions. So
Great.
appreciate it, Don.
Thank you. Well, that's all we have for iwantagreathomeloan.com. It's not rocket science. Go out and talk to your realtor or your lender, or call us if you have any questions and you'd like to get more information. So have a great day. Thanks for coming, and I hope you find a lot of good informational videos on our website. Have a good time, and we'll talk with you later. Thanks, Justin.
Thanks, Don.